Hey, good morning traders, this is Sam from Trade to Prosper. Today's Thursday the 8th of June, here to give you an update on gold. Having a look closer at gold, it does look like it is a local top, and let's just go through the steps. Let's just remove these for a sec. And one more. So this one here, so when I look from an elliott wave count, we have our 1, 2, 3, 4 and 5. And the one way of looking at targets, if you don't know, which is a good opportunity, we tend to apply Fibonacci onto the wave 3 and 4. So if you can see that, wave 3 and 4. Now what we have, which aligns very well, and I'll just make this a bit bigger, is a golden ratio 1.618 right there, and we've got the pullback. So that tells us that yes, it's likely a wave 5 on locally, and now we're looking for potentially an ABC correction. So what is a ABC correction? That could be a that could be a B could be higher, and then we get a C. C could be a double bottom and up, or further down to the 6 golden ratio here. So what we do is we've got the whole Fibonacci and the golden ratios at 618. However, let's just get rid of this for a sec. Give me a sec. What I'll do is pause. Now when we look at this level, there's obviously a reason why there is support here, and we understand that this is a macro top, and if we lose this, it could mean significant drop. So if you look at this level, there was a key level. Yep, if you ignore the wicks, we go to that level, and this is macro swing failure structure. Hits can we get that wick, and from here as well. It's closer to 0.618, give or take. So right now, if we were to do this, do the reverse engineering. So if we were to make this our top, give or take, our 618 is that major resistance right there. It does show that we are headed potentially from this, that 0 is the level in the short term. So it's likely to break down and touch this level for support. That is also aligned with the golden ratio. Now why is this level here as support? We'll need the answer for that as well. So let's just get this out the way for a sec. And hide this as well. Yep. Now if we pull this back all the way to the bottom, it is our 0.5 fib. Okay, so that is our 0.5 Fibonacci that's holding it up. Again, the 618 is there. Interesting enough. Can the 0.5 be enough? Well, it does look like from this perspective, ignore the trend lines. We've already broken that trend line and it didn't capitulate, so it's not a major thing at the moment. If this trend line was significant, we would have seen probably a bigger drop. Yep, so we have our 2 points. That's our third point, but the fact that it's going sideways, it might not be the actual line. It might not be a ascending wedge, but it looks like it, doesn't it? So what we're looking for is either a breakdown here, then I would I'm looking for that's A, B, C, D. E could be here and then down, or E could be there and down. I still feel like this is slight movement and our ABC correction. So our A is there, a B could be there, and our C is there. There is that fear that it could be a bigger one. That could be our A, that could be our B, and that could be our C somewhere down there. So, and that could fill into a channel or descending wedge of some sort. So if it was there, we still don't have that point of reference where there's a rejection. So if this was a rejection if this price was to go up further and get rejected there, which is very likely, that is a very likely area to short. But as we know, this has one more bounce. So we have our one cycle, this is our second cycle, third cycle, it could go up, and that could be our third cycle. And then what we do is we can adjust that trend line ever so slightly, and it could be maybe like that, for instance. Yeah, we don't know at the moment. It is a difficult area, but we're in a range, and this range is not, you can trade the range using swing failure patterns, just a small area if you're really interested in gold. What's the range worth? Well, if you look at that, the range is, give or take, 2-3% range of trading. So risk to reward ratios, if you see swing failure patterns on the bottom, go for it. If you see swing failure patterns on top, go for it. But obviously you're going to go on the small time frame. I would say probably 1 hour. And let's see how we go. Let's see how this took place. See if there is any good opportunities. Yeah, so that was a swing failure pattern there. Very well seen. So what happens is price goes below the previous, regains, and then up it goes. Here we had a swing failure pattern as well, but more of a failed auction, and so on. So it wasn't easy, but once you break that topping structure, you got previous resistance all along here. So that was one, and then we have the wick as well. So you can trade this range if you really like it. At the moment, we don't see anything significant. What I would like to see is if it takes that low. So if we see it come down and does that, so the longs of this is liquidity there and liquidity there. This could probably go further down, get those shorts out, and then back up. And if it comes back up here, you take a long, and then we potentially go up further more. But at this point, yeah, you can see it's actually not a bad chart. There's a lot of ways to trade this. Some parts, like the swing failure patterns, are all there. Very nice. So I'll be looking for this type of scenario where it might come down that much, and then we go, and if it regains this, then you re-enter, and you will probably get a move to there at least, or to the midsection, and then take it from there. But yes, at the moment it is bearish. It could be so if this could also be a reversal pattern as well. So a sell and climax has come down, automatic rally, come back down, secondary test. So a secondary test is a double bottom and then potentially up. So this looks good. It could be also a spring as well. So at the moment, we might be able to if it goes down there, we can put that one, and then we can say that immediate targets will be there, and these Fibonacci's as well. If that's the case, we just applying us, and it fits into the bigger model where it's our ABC correction. So that's our A. Here, where is it? There. Let's just make it black. And our B could potentially be up here. And you know what? It's a very good resistance level. We've got lots of, if it comes there, it's definitely a good rejection. Take some profit. So say if this was to come down here and then bounces back up, I will take profit there, and then look for the C move. And that C move could be measured from roughly there to there to there, and why is it yellow? I've got no idea. And then 618 is there, but I'll be looking at the lower levels, maybe one, and then so on. And we can see the trend lines. This trend line was significant, we had not so from the along with the macro, but that was another trend line, and you can see that once that broke, it came down, and it is falling into a wedge scenario, and usually this formation looks like a reversal, comes back up, gets a rejection, and then potentially down. But it can also go further up. We can go for a double top as well. And where are we? There we go. So if it goes there, we can still go for a double top and then down. And now let's look back on the daily, see how that looks. Don't want to take too much time, but yeah, that's the other scenario there. We can go double top, or we go ABC all the way down before we go. And then if this is the case, yeah, we'll take it as it comes. I don't want to go into more, but at the moment, that's what I see. There's the opportunities to trade within there if certain scenarios play out. Otherwise, if further go, it could come further down if that doesn't hold, and they'll be looking for that, because that's a nice level of strength, Fibonacci level, and then we'll take it, see how it goes. All right, I'm going to leave that at that. There's no more need to speculate, and just see how this macro top develops in the next few weeks, and then we'll do another update. Talk to you soon. Cheers.